Hello, I welcome all of you to today's session of Market Movers, in which we will take a look on the USD JPY, which is increasingly looking oversold after falling close to 104 levels. From 104, it has rebounded almost 100 pips, and now, for the time being, it is trading above 105, around 105.20. And here in today's session, we will consider the context around the today's price action. Earlier in the day, we have got a lot of data. Starting from the Asian trading session, we got the employment numbers for the Japan. Moving on to China, we got the NBS non-manufacturing as well as the manufacturing PMI data. And then it was the turn of Australia, where we got the credit figures. And even for the European trading session, the data docket was kind of full. And we got of particular importance the GDP numbers, and here for the second quarter the actual readings are worse than the expectations, and now for the second quarter the GDP growth rate stands at 12.1% in terms of quarter on quarter, and in terms of year on year the decline is of 15%. And this is actually, if we compare it to the yesterday's US data, this is worse than that. And in third quarter moving forward we can expect better numbers, but I think the earlier expectations of V-shaped recovery are out of window, at least for the time being. At the same time, we also got the inflation numbers, the CPI for the month of July. And here, in terms of both year on year as well as month on month, the readings are kind of mixed. We have the CPI rising 0.4%, which is, of course, a lot lower than what we were used to see in pre-coronavirus days. And in terms of month on month, the prices are actually in deflationary territory as the CPI is going down. And for the month of July, it is minus 0.3. Moving on to the North American trading session, we have got PCE price index data for the month of June, and here the year-on-year figure stands at 0.8%, whereas month-on-month figure stands at 0.4%, and these both the readings are actually worse than the prior numbers. And even the core PCE price index is less than the prior figures, and in terms of year on year the core PCE price index stands at 0.9% from the earlier reading of 1%. Now in a while we will also be getting the consumer survey data from University of Michigan, and here the key important factor to watch out for is of course the inflation expectations, which have been going down since the coronavirus pandemic's outbreak. And in this month as well we can expect a reading somewhere close to 2.5%. And the consumer sentiments are also down, and the expectation is that we will have the figures which will be worse than the June's reading. And if we take into account the current sentiment, consumer sentiments, it is also likely to go down, as we are seeing resurgence of the coronavirus outbreak in most part of US, and that is likely to show its impact in this survey data. Now moving on to the technical outlook, we will cover the USD JPY and the S&P 500. Let's start with the USD JPY's technical outlook. This is the daily time frame chart, and in today's session, as I said, the USD JPY is showing the signs of retracement, and after getting close to this 100% Fibonacci expansion of its prior run on the downside, we are seeing sharp reversal, and I think this is happening precisely because of the oversold conditions in which the USD JPY was after falling almost more than 300 pips in last couple of sessions. And now in today's session it is entering into a retracement zone, and moving forward we can expect some sideways action. Of course I am not really expecting a big turnaround in sentiments here, and rather than that we can look for scalping kind of opportunities if any come our way. Now in 4 hourly chart, we can see a reversal happening from the second support of this month's pivot point series, and today being the last trading session of this month. This is, of course, significant. And if we were to know about it in the morning, of course, a lot of you might have made money, but it's always difficult to judge from where we will see the reversal. But now, I think we can indeed play out the consolidation and see if we can indeed make money. I think in today's session it's going to be difficult, and mostly we will be getting ourselves prepared for the next week starting Monday. So here now the near term support stands at this swing low, today's low for the USD JPY, and in next few trading session that will be our base. So as long as the USD JPY doesn't really break below these crucial support zone, we can indeed try our luck on the long side. And purely from the scalping perspective, not big trades. Rather than that, we will have to go for sharp stop losses and take profit. And here, now the regression curve is of course sharply bent, and there is not much we can read into it. So moving on to the hourly chart, we have this immediate resistance zone coming into play around this prior swing high, yesterday's consolidation phase, and in yesterday's session we had considered the possibility of USD JPY going down towards 104, and that did happen. But now that was for yesterday, and if any of you had gone for that trade, I would expect you might have made a good amount of money. Of course, if you had cashed out before this reversal happened, otherwise it will be back to the square one. As we have got here, right now I wouldn't say that again we should be jumping on the bandwagon and try to go short. Rather than that, we should sit it out and see how it behaves in the latter part of today's session. We have like 5-6 hours left in today's session, so by the end of US session we will have the actual clarity if the USD JPY is going to struggle to cross above this or not. And from that we can say from the way the price action behaves, we will be able to draw on the conclusion and take our bets on Monday's session. And as I said, we can indeed look for scalping kind of opportunity, but I would say that it will be better if we look for on the buy side. But from that perspective, we will need the entry to be lower, lot lower, not anywhere close to the current price zone. So I would suggest that for today's session, it will be better to sit on the sidelines. And here in S&P 500, we are seeing sort of reversal as well. And of course, this was not any sell-off, and it is more of an consolidation phase. And now again, the S&P 500 is trying to get back to its ways of going higher and higher. Let's see how that looks like on the daily time frame chart. So this consolidation which we saw closer to 3200 zone, I think again the S&P 500 is getting ready to move higher, and of course then the natural target is this prior swing high, the all-time high closer to 3400. Nasdaq did breach the prior high and is now trading higher than that, but for S&P 500 and the Dow Jones, the things have been not that rosy. Of course, the S&P is performing better than the Dow Jones, but that's about it. And moving forward, we can indeed expect the S&P 500 to catch up and try to retest this all-time high. So I am personally betting on that. And if we were to look for any fresh opportunity in today's session, I would think that we will have to take into account this price action and any entry closer to this first resistance, which is closer to 3240, would be an good opportunity to go get involved on the long side of the trade. But of course, for that we will need almost half a percentage point move from the current price to the lower side, to the towards this immediate consolidation zone, and that is will be a tough ask if we were to look at the current price action in the S&P 500, as the gains have become more incremental and the price action has shifted to the sideways trajectory. We are seeing that this regression curve has also flattened to some extent, and now it is showing the signs of fatigue, and we can say that in next couple of sessions the price action might be prone to choppiness, and we might see sideways price action, but still the underlying bias still remains on the bullish side, as you can see from the price action as well, that we are trading above this first resistance zone, and the price action is in the bullish phase from this pivot point series perspective as well. And on Monday we will have the new series drawn, in which I am pretty much sure that we will have this central pivot point moving higher. So coming to the hourly chart, we have this confluence zone of 50, 100 and 200 SMA around 3250 price area, and I think that's the crucial price zone to look for any buy entry in the S&P 500. And as I said, any entry closer to 3240, which also happens to be the 100 SMA price, would be an excellent buying opportunity even in today's session. So stay tuned for the S&P 500, and if in today's session you indeed get that opportunity, I would say that you should jump on that. And of course the stop loss is going to work out close to this prior swing low, which is there around 3210. So for S&P 500 trade, you will have to take the risk of around 1 percentage point, and with that risk of around 1 percentage point, you can indeed expect the S&P 500 to get back to its prior swing high or even beyond that. So on the higher side, you can target a price zone of around 3300 to above that 3310. So at least you will get a risk reward ratio of 1:2. So that's it from my side for today's session. And if you have any query or any idea to share, you can indeed write it in the comment section, and I would be more than happy to take the discussion forward. Today being Friday, most of us will be heading out once the trading is done, and then we will be back on Monday. But even in today's curtailed session, of course, don't forget about the risk involved in the trading of financial instrument, and one should be careful while using the information provided. Have a fabulous time. See you on Monday. Goodbye.